Hi, this is Motoaki Joe, and in this lecture, I will explain about bookkeeping. At first, the purpose of this lecture, there are two main purposes. At first, there are some of you have the clients and support for the business record making. So for those of you, uh, I will explain to understand the basics of business record making. And for the same purpose, I want the participants to get accustomed to the formats of the journal entries and types of books. So these are the main purposes of this lecture. And another one is the next lecture. Uh, we will learn the procedure for the monthly trial balance preparation, because the accounting is not only the issue for the accounting person, the sales and purchase transactions are related. So in the next lecture, I will explain about it. But let's get started with the first lecture. These are the outlines of this lecture. I will explain one by one. At first, it is important to understand the total flow of the accounting from the voucher making up to the financial statement. In this lecture, I will cover from voucher making, entry to books system, posting, general ledger, and up to trial balance. But let me explain the flow. So when there is some business transaction, like payment for the expense, or when you receive the sales for the cash collection, you will make the voucher. And then together with the receipt or invoice, you will record it in a computer book, or if you use the book, the actual real book for the accounting, you will record it in the book. So that recorded journal entries will be posted to general ledger according to each account title. So if it is sales, sales is category, summarized, and also account receivable or inventories. So each account title is summarized in the general ledger. And from that summarized figure, the trial balance is made. And based on the trial balance is a mixture of the profit and loss statement and balance sheet. So based on it, there are some adjusting entries to adjust the period of transaction, if it is this year, or if it is last year, or if it should be in the next year, so that the accounting, according to the accounting period, each account title will be finalized in the financial statement. So from voucher making up to the trial balance making, it's a monthly procedure. And for the adjusting entries and financial statement, it's a yearly procedure. So it's a total picture of the bookkeeping. Next one is the accounting book. So that there are two types of accounting books. One of the books is called main book. It's main, so it's necessary to make financial statements. And another one is the subsidiary books. These are made when needed for supplementing the information of main books. And for the main books, they consist of general journal and general ledger. I will explain these two in this lecture out of the main books. And for the subsidiary books, the important one I will explain in this lecture, for example, cash books, and also account receivable books, and account payable books. I will explain about these subsidiary books. These are the detailed information to the account title recorded in main books. So it's a supplementary information. So let's look at the general journal. At first, journal entries to be recorded in a general journal. Let's look at the rules of journal entries. It's called the double entry system. So that you might have heard of this double entry system of bookkeeping. Every transaction affects two sides. So there are debit and credit side. DR is used for debit and CR is used for the credit. And debit and credit may represent either increase or decrease of each account. For example, if when the sales is recorded, which side, debit or credit, do you record? It's in the credit side. And if when you record the expense, debit or credit, which side do you record? It's debit side, right? So for each account, the debit side and the credit side, the nature of the transaction, nature of the recording is decided. And another important feature of the double entry system is that the figures in the debit side and figure in the credit side are always equal. So if there is some difference, there might be some mistake to find. So these are the rules of journal entries. So let's try some journal entries with examples. For example, this is an example of the purchase. The ABC Ltd has the following transaction during the month of July, passing necessary journal entry. So on July 4th, the company purchased material worth 4,000 Ghana cedi with cash payment. So how do you record? So this is recording. Date and the particular, you will write the account title. So it is purchase. So purchase and also the cash was paid. So cash. The purchase is expense. So the debit account 4,000 is recorded. And cash is asset and asset is decreased. So 4,000 is recorded in the credit side. Next one is also about the purchase. So July 4th, the company purchased material of 5,000 Ghana cedi with account payable this time. Then what would be the journal entry? So purchase in the debit side, it is the same. But for the accounts payable, this time is recorded. And also it is liabilities, and liability was increased. So it should be recorded in credit side. The next example is about sales. So the company sold palm oil worth 8,000 Ghana cedi and received cash. So what would be the journal entry? So the cash was collected. So asset is increased. So it's in the debit side, and the sales is it should be recorded in credit side. So sales is increased. So it's 8,000 is recorded in the credit side. Another example of sales, the company sold palm oil was 8,000 as account receivable this time. So that this time the journal entry will be account receivable, and its asset So 8,000 is recorded in debit side and sales is recorded in credit side. The next example is expense about the salary. So the company paid the salary and related tax in total of 5,000 Ghana cedi. So that also, although the breakdown is decided in this way, please refer to the account title and which side do we record. For example, payroll expense 2,500 Ghana cedi and wage expense 2,000 Ghana cedi and payroll tax 500. In total 5,000. And then it is paid by cash. So the cash was decreased. So it should be recorded in credit side. Another example is about cash payment for the account payable. So that company paid cash of Ghana, 3,000 Ghana cedi for account payable. Then the transaction will be the account payable is a liability. So the company pay for the account payable. So the liability was decreased. So it should be recorded in debit side. And also the cash was paid. So 3,000 should be recorded in credit side. Another example is the cash collection for the account receivable. So it's an opposite transaction of the last time. So that the company received the cash for account receivable was 5,000 Ghana cedi. So in this case, cash was collected, cash was increased. So it should be recorded in debit side. And account receivable is an asset. It is already paid, so that the asset is decreased. So it's in the credit side. Another one is the expense, general expense, like in this case, telecommunication. So that in July 28th, the company paid telecommunication was 500 Ghana cedi. So it's a expense account. So debit is recorded. In debit, it is recorded. And cash was paid. So it should be recorded in credit side. And the last one is about fixed asset. The company had purchased the furniture worth 1,000 Ghana cedi. In this case, the furniture is an asset. Furniture is a fixed asset. So it is increased, so it should be recorded in debit side. And the cash was paid, so it's in credit side. So these are the journal entry transaction. These are the very basic but important transaction. So please understand that when there is a sales, how do you record? When there is an expense, how do you record? Okay. And when you collect the cash or when you pay the cash, which side you should record? These kind of things are important for the journal entries. Next one is about voucher making. This is an example. So this kind of voucher is attached with the receipt or invoice. And together with the voucher and these receipt and invoices, you will record it in the computer for the journal entry or record it in a book. Let me briefly explain about the format. So if there is a check payment, there is a payee. And the content of transaction is always written. In this case, office supply expense. and voucher number and the date of the voucher making, and account code if you use a computer system for the accounting for account title. In this case, office supply expenses is recorded as account code of 123, and cash also. The debit and credit, this is the same way of making the journal entries that I just explained. So each voucher, there is a person's name for the preparation and the person's name for the approval. So all of the voucher can be kept in a book and kept in the desk or bookshelf. From now, I will explain about general journal and general ledger. In order to show the figures and the characters are big enough, let me erase my image for a while. This is general journal. In general journal, all of the transactions are recorded so that as we have been through, there is a purchase of the material for the cash payment, and also that with the account payable, and also sales was recorded with the cash payment and also with the account receivable, so that all of the transactions are recorded, and also that the debit and credit are recorded. Just the same way of the journal entries. So you will know all of the transaction in general journal. And PR means that the post reference. So when you post this transaction to each related account in general ledger, you will write down the number allocated to each account. So from the general journal, you will make the general ledger for each account. And this is the example of the cash. So that the debit side, when cash is increased, it should be low. It should be recorded in debit side. And in this description, the counter account of the debit side is recorded. For example, July 1st is just carried balance from the previous month. But July 10 is a transaction. It was sales was recorded. When we look at back, July 10, sales was recorded and cash was increased 8,000. So in this case, in general ledger, a counter account of sales is recorded for the cash increase of 8,000. In the same way, July 22nd, 5,000 is cash is increased, and counter account was account receivable. It means that the account receivable was collected. Let's look at the general journal. On July 22nd, this is the transaction. Cash was increased. So for the cash increase, counter account is recorded. Let's look at the credit side. The part in July 4th, there is a recording of purchase. It means cash was paid for purchase. So let's look at the July 4th transaction. This purchase is recorded and cash was paid. So that, by the way, when you check the general ledger of each account, for example, cash, you can look at the cash account in the general journal and which side was in which side the cash was recorded. These are reflected to the general ledger. So July 15th, the salary expense was recorded in total of 5,000. So it is recorded. On July 22nd, account payable was paid for the amount of 3,000. On July 28th, communication expense 500 was paid. So that for the cash, maybe it looks very easy because the transaction can be imagined. Let's look at the account receivable. Account receivable. So in the same way, the counter account is recorded in the description. For example, account receivable on July 10 was recorded as for the amount of 8,000, and counter account was sales. So sales was recorded and account receivable was increased. So it's 8,000. Let's look at the general journal of the July 10th. This is a transaction. So you are now posting it to the general ledger of the account receivable. And when the account receivable was collected and cash was collected, so that in that case, it should be recorded in the credit side, and the counter account of cash is recorded. So debit side is 8,000 and the credit side is 5,000. So that the monthly ending balance, month-end balance of the account receivable is 3,000. In the same way, accounts payable can be checked. For the credit side, purchase was recorded, and at that time, accounts payable was also recorded. So 5,000. And also that the accounts payable was paid on July 22nd. So 3,000 is recorded. Next topic is trial balance. Since we have made up to the general ledger, basically the same figure of each account is just transferred to the each description, each account of the trial balance. So when you use the computer accounting software, when you record the journal entries, general ledger is automatically made, and also the trial balance is also automatically made. So it's basically the same information. So for your understanding, for the general ledger, you finalize the balance of each account, the balance of the month end, so that each account month end balance is written in the trial balance. So for the trial balance, there are some adjusting entries, as I explained before, to adjust the period of the transaction into the certain year, or in the monthly accounting. For the case of the monthly accounting, the transaction is for the particular month, should be for the particular month. This kind of adjusting entry will be done in the trial balance, so that for each account, the final figure will be decided. And the trial balance, another feature is it's a long table, consists of the balance sheet accounts and profit and loss statement accounts. So the orange colored account titles are related to the balance sheet. So, and also the purple colored uh, uh, accounts are related to the profit and loss statement. So actually, when you finalize the trial balance, it means that it automatically can be created for balance sheet and profit and loss statement. And these figures are related to the sample journal entries. Only the property, plant, equipment, and the capital stock, these accounts, we didn't do the journal entries, but other figures are related to the examples. So when you restudy, please look at the previous transaction. From here, I will explain profit and loss statement and balance sheet. So just from the trial balance, this purple part is transferred to profit and loss statement and just segregate the gross profit and selling general and administrative expense and operating profit. Another issue is that operating income is computed in the profit and loss statement. This 1,500 is related to the balance sheet of the retained earnings. I will explain in the financial analysis lecture, but the profit and loss statement and balance sheet are related, correlated, so that the profit earned recorded in the profit and loss statement is recorded in the balance sheet for the equity section as well. And other accounts and figures are basically the same one taken from the trial balance. As we have learned, the journal entries are posted to make general ledger, and each account of the general ledger are transferred to trial balance. And in the process, subsidiary books like cash book and other subsidiary ledgers are made for supplement and for the detail of the information. Let me explain about subsidiary books. Let me explain about cash book. Cash book is to check the actual amount of cash in hand and cash recorded in the book for confirming the consistency of whole business record. So for example, in the general ledger, if the cash amount is not the same as the actual cash position, it means that some journal entries are recorded in mistakenly, so that any mistake of any transaction, any journal entries goes to the cash account. So that is why that cash is important. And for the cash book, the way of recording is that enter it in receipt if you receive the cash, and if when you pay and the cash is decreased, should be recorded in the payment side. And after each receipt or payment, each balance is recorded. So that the format is quite easy and you can control the amount of cash in hand. And this is the subsidiary ledger for the account receivable. So this is useful when you manage the account receivable for each customer. Then that you can break down the company A, B, C, D, and the debit side is the increase of the account receivable, and the credit side is when you receive payment for the account receivable. Then the ending balance of month end can be calculated for each customer. Then total of each balance, month end balance, is recorded in general ledger in the account of account receivable. Account payable subsidiary ledger is also same way. When you need to deal with some some suppliers, you can manage account payable for each supplier and how much is the balance, how much balance is left for payment. So account payable also that some of the each account should be recorded in the general ledger of account receivable. This is account receivable, not the account. This is account payable, not the account receivable. Sorry. This is the end of bookkeeping lecture. Thank you for listening.